welcome to our podcast, Broker Banner Denver, where we are breaking down barriers to home ownership. We are your hosts. I'm Kim Davis, your real estate expert.
And I'm Patrick Williams, the mortgage guy. We're here to inform and educate about the financing and home buying experience.
And today we are going to explore some lending programs. We're going to talk about some lending programs and also some changes to the real estate purchase contract. But before then, let's start. How are you doing? Do you like my little?
I do. That was exciting. It made me feel excited about the weekend. I'm good. How are you?
I'm good.
You excited for the Super Bowl?
Yeah.
A little bit?
Yeah.
Yeah.
You know, by the time this posts, it'll be over. So,
but we'll know
yay!
who won.
Aren't you excited that Kansas City won?
No, nobody wants Kansas City to win.
Sorry, Colin.
I know. But no, it should be a fun weekend. Some more snow's coming in, which is good. Yeah. Hopefully you can get up and ski some more.
So have you seen on the internet, there's this new Apple visual, what is it?
Yeah, the augmented reality goggles.
The augmented, I want that.
That is crazy.
I think I want that. I do get sick on any CG rides, so I mean, who knows?
Yeah, I do
Maybe
too.
I don't want that, but I'd love to.
Like the Disney World rides where they move the cart thing and then there's like a screen. It's like my body is like, no, you're not going to trick me.
Yeah.
Like I know better.
Oh,
I get motions. I get very motions. Yeah.
But I wonder if the Apple.
I haven't heard that.
Make you sick.
The screens that I've seen of people like doing kind of like where they're walking around their house and they've got like 18 screens up around their house and they're like swiping stuff away and they're like, oh, I'm gonna watch some TV on this one, and it's like the whole wall.
Yeah,
I mean, it looks
Did you
really
see
amazing.
the guy who is on the subway, New York subway, and he has it on, and they're saying, hey, it's just like he's just waiting to get mugged. And so what I read on it was that it actually has like a camera behind you and a camera in front of you, so you can kind of see it in the vision, so you know if someone's coming. But I wonder how long until, you know how when iPhones first came out, it took, I think 3 years before like everyone started to have it. I remember when the first one came out. It was big. It was big.
Yeah.
Was it 99 maybe?
No, not that soon. It was 2007, I believe.
No, was it?
Yes.
Wow.
Only because I heard a stat, which we know
that
about
98% of people make up. And
no, the stats are made up.
Right, stats are made up. Apparently I do that too.
You make up stats.
I don't mean to, but I guess I have.
Like Colorado is the second sunniest state. That's right. We're actually number 6. But no, that from 2007 to 2009, so the first 2 years of the iPhone, the amount of photographs that were taken in those 2 years surpassed all of the photographs ever taken previously to that time period because of the fact that everybody just had a camera in their pocket, right? And so everybody just started taking pictures so in 2 years, we surpassed the total amount of photographs ever taken.
Which makes sense.
It does.
I mean, I take more photos. Like I just went out this week with some what we call K-moms or kindergarten moms. They're my youngest daughter, Lulu. She will be a senior, or she is a senior.
She's graduating this year, right?
And so there are like a handful of us, I think 8, 9 ladies that we all have known each other since they were in kindergarten. So we've
that's cool.
Been together for 12 years now, and so we get together probably quarterly. We try anyways.
Yeah.
And so we just went out to dinner at my mom's restaurant. My mom owns the restaurant in Inglewood.
Yeah.
Zomo, in case
Great
anyone
food,
wants
by the
to
way.
go.
You must try the egg rolls.
Vietnamese, in case you're not watching this and you're listening, I'm Vietnamese. You know,
you
first
are.
generation born here.
You are.
Thanks.
Yeah, I did.
Patrick.
I realized that a little while ago. But I do know that your mom is a fantastic cook.
Yes.
And the food at Zomo's is great.
Thank you.
Yeah.
I can't remember what I'm talking about now.
So you were talking about the K-moms and going out together.
And there was a
point. Can I guess?
Sure.
Okay, so you took a picture of the menu and you zoomed into it. Oh, okay.
That is not what it. But that's right. We were talking about pictures. We took a lot of photographs, just like the same pose, but like 20 different photos because it's all digital, right?
Right. It doesn't matter.
And back in the day, when we got married, the cool thing was to put the 35 millimeter disposable cameras and everyone took pictures. Well, my younger brother just got married in August, and I think they actually had to look they wanted to go old school. So they found some, they ordered them, I think, on Amazon.
You gotta be careful of those though. Some people take, maybe inappropriate pictures.
I'm
just saying, not that I've ever done anything like that.
I think that's why Snapchat was invented, but
because they go away.
Yeah. Even though I Snapchat now.
Well, I think a big portion of those pictures taken, what I do, because I'm starting to get old, is I can't
Starting?
Okay, I think we know. Anyways, my birthday is in a couple weeks, so no, but I will take a picture of something I can't read. And then I zoom in on my phone so I can read it,
my
so I don't have to get readers.
I'm older than you, and you are doing that. I haven't done that yet.
Never? Not even like really fine print?
I have maybe for a Tylenol or
not Tylenol. I'm not talking like the side of the the cereal box. I can read that, but like the really tiny print.
So not the menu in the.
No, not the menu.
You know what I have done at restaurants now is I will use the light sometimes to be able
I think you are older
see.
than me.
I am older than you, but I don't need cheaters yet.
No, I don't either. I did look around. I get together with some guys about once a month and we get breakfast. And I start looking around and like 3 of them are putting on readers to look at the menu. And I'm like, oh my goodness.
Which I think happening? One of them.
Might be your husband.
Yeah.
Yeah, but I don't think he wears readers, does he?
He doesn't read readers. And he's the second oldest in that group.
That's true.
In his 50s. He's in his 50s.
But there's multiple people. And I'm like, wow, when did I get so old? It happens fast, just so you guys know out there. Before you know it.
Oh, we sound old.
I know, but it's true. It's the truth. I mean, you don't know. You have kids, and then all of a sudden they're graduating high school, and you're like, what just happened in the last 20 years?
I know.
Yeah, it's true.
It's crazy. Well, and we've been married 22 years.
Okay.
This year will be 22. Been together for 25, so I'm almost at that age where couple more years where I have been married longer than I've been single.
Yeah, my wife and I were talking about that too. We'll be celebrating 20 this year, so kind of a big one. But we were pretty young when we got married, and she's like, I think I've spent more of my life with you than without you, and that's a cool thought.
It is cool.
Yeah,
it's not cool when you're 20.
No,
because you think, oh, that's going to take so long,
but it goes. Fast. It goes fast. Yeah.
Well, isn't there a saying that the days are long, but the years fly by?
No, it's so with kids, and it was something my mother-in-law actually said to me when the kids were young, and I still remember it. And it's the days are long, but the years are short. Oh. And so like
I think that's basically what I said.
No, that is not what you said. Not even close.
Yes, it is close.
No, it's not. But no, I mean your youngest daughter is graduating high school this year. My youngest is going to be graduating next year. And all of a sudden we're looking at a nest that might be empty here.
Well, not in Denver. I think my kids are sticking around. Well, I have one that, finished hair school, Ava, and then we'll see what this daughter does. She seems to, COVID really, I think, did a number on a lot of kids this age, and maybe it was tough. So
and it was during a really important time. I think Lulu freshman, sophomore year,
8th and 9th grade year. So basically, the end of 8th grade, all of 9th grade was kind of that weird.
And those are tough years, anyways, right? Like middle school into high school. And then you're, stuck at home and learning on, remote
love being
and all
with their
that.
Parents.
I'm sure they did.
No, they didn't.
My kids really just, all they want to do with their spare time is hang out with me and their mom.
It's not true. Who wants to hang out with their parents when you're a teenager?
Oh, no. It's fun. It's really cool watching them grow into the people that they're going to be and accomplish things. And, it's great.
Right.
I'm really proud of both my kids.
Yeah.
And it's cool to see them growing into adults.
So you look a little further in the future. I'm just looking
trying to make it through tomorrow.
I'm just looking for one of them to graduate. I'm just hoping graduation is.
You can do it.
You can do it, Lulu. In May. We got it.
She's going to be fine.
She is. She's going to make it. I'm not that worried. I'm joking, but and serious at the same time. So
we're into the second semester of the senior year.
Right.
Usually you have a pretty good idea if you're gonna make it or not by then. Yeah.
So what about loans are we going to talk about today?
Yeah, I thought we would maybe just talk a little bit about the different loan programs that are available out there. And they're kind of like 3 categories of loan. You have your conventional loans, your government loans, and then you have your jumbo transactions. So conventional loans, those are loans usually for folks who maybe have a little more credit history, have been on the job, a couple years, and
it's the loan that most people have. Maybe in Denver, maybe they've
I'm not
moved to jumbo just due to.
Well,
not
actually,
really?
so conforming loan limits, which is going to be the maximum loan amount that you can have on your typical conventional loan, is $766,500 now.
In the Denver metro area.
In the Denver, well, that's actually across the country. There's some higher areas like Boulder County, sections of Denver that have higher loan limits. Fort Collins, Larimer County, but that is the conforming loan limit. There's some high balance loans you can go above that as well, but it for the longest time it was $417,000.
I know. I remember those days, and just as housing has continued to rise, you have to, and people want to be people usually would you say most are conventional?
Yeah, the majority.
Most
The majority of
people.
borrowers go that conventional route. It's Fannie Mae and it's Freddie Mac, and those are the typical loans that the majority of my buyers look at.
Right.
Yeah.
And then of course there's FHA, as you were saying.
Yep.
Which
And
is
so
a federal
FHA
loan.
allows a little less down payment. You can put as little as 3.5% down on an FHA loan. It does require upfront mortgage insurance premiums to be paid, and typically it's for buyers who might not have as well established credit, maybe have a less stable job history and things like that, and it allows a higher debt to income ratio. So people maybe who have a lot more maybe school bills or car loans, credit cards and things like that.
Usually people who have FHA are usually, like you said, first time home buyers, and it could be, or if you have debt to income, a little more debt, and so that would be a reason. But a lot of people would want to go conventional because then you don't have to pay.
It is, yeah. So
cheaper?
there's a couple different factors. If you are able to go conventional financing, I would definitely recommend that because it is the most, like your annual percentage rate is going to be lower than it would be on the FHA loan. So the FHA loan requires upfront mortgage insurance premium to be paid at closing. It's financed into the loan, but it's a pretty substantial amount, and that just kind of offsets the risk of the higher debt to income ratio and loan to value.
And FHA changed that a few years ago because back in the day when everything was defaulting, so here in Colorado, our low was 2010. I know that it's different throughout other states, but our low here in Denver was 2010, and then 2008, 2010, just depending. But our low here was 10, or from what my memory and me being in the business
some markets
was 10.
Dipped earlier and
Right.
came out sooner, and
Right.
some were doing fine for a little longer, and
And so what we were talking about, in case you weren't here in 2010, there was a lot of mortgage defaults, and so that's why you pay mortgage insurance premiums, right? So
correct. So a mortgage insurance premium doesn't actually insure you as the borrower; it insures the lender in case you default. So it's only the FHA loans and the government loans, VA as well, you pay that upfront mortgage insurance premium. And the rate for the monthly premium is a little higher because the risk is a little higher there. But it's a great way. Like, I think some people don't understand the benefits of mortgage insurance. I think it's fantastic because if you can get into a house with putting 3.5% down, get in. And then that way you can start building equity, and instead of throwing your money away and paying somebody else's mortgage on rent, you're building your own, wealth.
And we talked about this in one of our earlier podcasts, but you kind of went into, I think, credit and the myths, I think, right? About 20% down.
Yeah, we talked a little bit about that.
You don't need to have 20% down to buy a house. You can do it as low as 3%.
3% on the Home Ready program, which is a Fannie Mae program. It's conventional. Yeah. So, but the mortgage insurance is a little higher than if you were putting 5% down. So you have to look at that, and that's why you want to work with a loan officer that knows the programs in and out, and they can actually take a look at your situation and say, look, here's a side by side comparison. This, and help you make a well-informed decision on what loan is right for you.
But I think that's why the myth out there is 20% down, because back in the day of maybe our parents or our grandparents, for sure, they wanted to put 20% down so they wouldn't have to pay mortgage insurance.
Right.
And now, you can get into a conventional, but a regular conventional is like 5%, right?
5%.
3%, but 5%.
Yeah, the Home Ready program is a 3% program. There's some first-time homebuyer education courses that you have to take along with that. But your conventional loan is a 5% down loan program. And when you start looking at getting into the market and building appreciation, you're able to get out of that MI a lot quicker because you only have to pay that mortgage insurance until you have a 20% equity stake in that property.
And there was a time that was 1 year here in
When
Denver.
when appreciation rates were as high as they were, you could get in and then you could go and refinance or get an appraisal done and send that to your lender and say, look, you need to drop my mortgage insurance. I have 20% equity in the property.
Okay, so we've gone through FHA, conventional. Was there anything else
bit
on
unconventional
conventional that you wanted to?
I mean, it's just that's your kind of vanilla typical loan is your conventional loan. There's not really anything, too special about it. It's just if you can qualify it, it's fantastic. It's the bread and butter of the mortgage industry. It's backed by Fannie and Freddie. So those are your.
So then the next would be jumbo.
Well, no. So we missed. We talked FHA, but there's also the VA loans.
Oh.
So that's a second subcategory of those government loans, and those are available for anybody who's ever served in the military, and it's part of their benefit package for serving their country, which we thank anybody who's ever served in our military and protected our country.
Thank you so much for your service.
And the benefit of that program is that you don't have to put any money down.
Right.
So that's amazing program. So if you do have your entitlement through the Veteran Affairs, then you need to make sure that you're utilizing that.
And okay, so then now jumbo.
Now jumbo, yeah. And jumbo is a unique program. So anything over that 766 500.
So if I'm buying a 900. Or let's call it $1 million.
I'm buying I like easy math,
yes,
Kim.
Yes, me too. So we're buying $1 million house, which if I have enough down payment, then I can go to conventional. If my loan is only $766,000.
Yep.
But let's say I don't have that much down payment. I have $200,000. So that means I have an $800,000 loan that I need.
Yeah.
So that would have to go jumbo.
Yeah.
What does that mean?
That means that those loans are serviced by specific banks, and they usually have what we call overlays. So jumbo loans usually require a higher credit score, usually like 740 and above.
Okay.
A lot of times they will require reserves. So, 6 months of your mortgage payment verified in your bank account after closing. So not only do you have to have the down payment, but you also have to have additional money to show that, you have an emergency fund, just in case.
But it doesn't have to be cash. It can be
no. You
401k.
Could, yeah, you could use your 401k or a CD or any assets that you have available to you. We just need to make sure that you have access to those. Right. So usually, your employer can provide some terms and conditions of withdrawal. Yeah. It doesn't have to be liquid in your bank, though.
Right.
That's correct.
Would you say that in Denver, just with housing prices going up, that you see a lot more jumbos than?
We do, and there was a time period. I personally, when I bought in 2009, I used jumbo financing because the rate was actually better.
Oh, that's right.
Because of the additional overlay. So because I had 6 months reserves, because I had a higher credit score, because I can meet those things, the risk is less, and so the interest rate is going to be less because that risk is offset. So even though I could have done a conventional loan, like a high balance conforming loan, I opted to go jumbo just for that better interest rate.
That's a great question. I mean, not a great question, but a great thought, because if, for instance, let's say someone is buying the $1 million house, they have enough money to go conventional, right? They have enough down payment. They may want to, if they have
So we can always definitely look at. I will look at every loan program possible for you and make sure that we're getting you into the right product. Unfortunately, today, the appetite for the jumbo loans is not quite what it was in the secondary market back in 2019. So the interest rates aren't quite as good, but I think we might be seeing a resurgence in that towards the second half of this year.
Speaking of, it doesn't sound like the Fed did any favors for mortgages this past week.
Yeah, there was a nice 60 Minutes interview that the Fed Chairman Powell did on Sunday night. And it doesn't sound like they're going to be cutting rates as quick as some hoped. Personally, I thought the outlook of getting interest rate cuts as soon as March was really aggressive. I didn't actually see that happening. I was thinking more that June meeting, and that's still possible. There's a lot of information that's yet to come out. We have last week a really strong jobs report. So that was good news, right? For the markets, bad news for interest rates, right? We talked about how good news can be bad news. So the economy is actually staying fairly resilient. Job creation is great. Inflation is coming down, so that is good news. And that's what's coming up next week is the Fed's favorite measure for inflation, which is CPI. And that report comes out Tuesday, and we're really hoping.
What is CPI?
It is just their
protection.
I don't. You know what? To be honest with you, I think it's consumer price
index.
That could be
we'll
wrong.
Have to
Please
look
don't.
that
Yeah,
up.
we might have to get fact check on that one. Anybody? No, but what it is.
Fact check.
My understanding is that it's the inflation figures minus housing and gas, because those two are the most volatile, and so it really gives you a good idea of what the true inflation numbers are.
Can I just say I'm happy I'm in real estate and not mortgage, because I got a little bored there for a second.
Boring. It is. You know what? There's
just
a lot
kidding.
of.
I'm not
no,
kidding,
but there is a lot of.
There's a lot that goes on
There
into
is.
interest rates, and of course, with it being such a big deal. But the positive, as far as on the real estate side, I mean, we are about to hit our busy season, right? We're hitting February, March, which in Denver starts to, people don't like to move when it's cold, and so
it has been cold.
It has been cold, and we are expecting another big storm. But the thing about it is I'm still having some buyers who are still having a good, we're not having to overbid. We are still, getting in there. There's plenty of inventory. There's over 4,500 plus actives.
Oh, that's great.
Homes right now, so that's great.
That's higher than we've been for a while. No,
yeah, we've been kind of holding steady there for the last
time of year.
For this time of year, and I think. Last month in January, I believe it was something like 3,300 actually went under contract, which
that's a good
means
number.
So it's good for buyers, still good for sellers, but once again, don't wait for those interest rates to go down to 5.99 or whatever it is. That's what everyone's looking for. And what everyone tells us in the industry right now is that if interest rates hit anything in the 5, so 5.99, that means it is going to be another buying frenzy, which is great for you as a mortgage broker, right? You're going to have more clients who want to jump in the market.
Great for sellers.
But it's great for sellers, but it's harder for buyers, because that means you give a lot more to these sellers. Like they hold more of.
You lose your leverage as a buyer, right?
That's leverage.
Yeah,
correct.
and multiple offers are coming in, and you're waiting contingencies and
Of course, we can always talk about that. Those are things that we'll talk through. Inspections and all that stuff. But
and just so we back to the interest rate portion of that, I do think rates are going to continue to come down. They've been really volatile over the last couple of weeks. They've actually popped back up a little bit. We're getting back closer to 7. We were seeing more like between 6.5 and 6.75. But that jobs report and what the Fed had to say, really, rates have gone back up since that point in this week. Yeah. So that just shows the volatility in the market. I honestly think that inflation is going to come in cool. I think we've met what we needed to do with inflation, and the Fed's just kind of digging their heels in and waiting.
I think they're always a little bit behind.
They are. All the information is backwards looking. We're looking at numbers from December right now.
Exactly.
Yeah.
So here's the thing, though. You can start the application process, and you don't lock in rate until after you find a house and after. So if you are thinking about buying a house, you should contact me or Patrick and just look and see, hey, this is what your payment could be at 7%. This is what it's at 6.5%. You can run numbers like that.
And the other piece of that too, especially when rates were so high, is I had a saying, it was date the rate and marry the house, right? Because if you find a house that you love, just because rates are high right now, if you can afford to get in there and you qualify, go ahead and do that. You start building equity now, and then at the mortgage company, we'll actually refinance your loan. We'll waive all our fees.
Right.
So there's always fees associated with a refinance. You have to pay some title fees and get an appraisal.
I think we talked about this a little bit prior, but
but there's you can't. wait out, because I think there's a lot of people that are sitting on the sidelines right now, and I just think that's a big mistake. So
especially if home prices continue to go up, you're going to miss out on that equity.
yeah,
Yeah.
So I think we talked about
FHA,
conventional,
VA, conventional.
VA,
we just touched on jumbo.
A little bit.
Is there
the only thing I thought that we could talk about maybe a little bit was the difference between a fixed rate and an adjustable rate mortgage. I think adjustable rate mortgages have gotten a bit of a bad name since the meltdown back in the 07, 08 period.
Early 2000s.
There was a lot of we would call them just
adjustable rate.
Unique products. People were very inventive back then. There was a lot of you got this interest rate now, and it was actually not even enough to pay the full amount, and so your balances were going up. And so there's a lot of those unique products that are no longer around. But an adjustable rate mortgage can be a great product. They have fixed rates for sometimes 5 to 7 or 10 years, and a lot changes in your life in 5, 7, 10 years. I know I didn't stay in my first home for 10 years.
Right. So I could be making this statistic up, but back in the day, it used to be that people would only live in their house about 5 years.
Yeah.
I think that's changed a little bit, but it would be because you would have a life change, right? So maybe you bought a house when you first got married, and then you had a child, and so then you need a bigger house. And then, or unfortunately, right, if there's a divorce, a passing, anything like that, those empty nesters, right?
Yeah.
Children leaving.
Yep.
Those are reasons that people make moves usually. And we saw something different during COVID because people were stuck in their house. They were like, oh my goodness, we're working from home. We have schooling from home. We need more space. We need an office.
People weren't going to their work, right? A lot of people were working remotely, so a lot of people left the city center and moved to the burbs.
It is pretty crazy that there is a big company here in Denver that just required them in 2024 to return to office.
Yeah.
And people aren't liking that.
Well, I think there's a lot of companies that are, it was interesting, the messaging back then was, oh, we love remote work, everybody, this is great, and now...
I don't think it'll ever be like it was pre-COVID. I think a lot of bigger companies may have seen that they can save some money.
Yeah, with office space, right? And things like that. I really think the hybrid model is a great model because, you have an office, you have a space that you can go into, but you also, can work from home a day or two a week and everybody likes working in sweatpants. I mean, even if you have a Zoom, you can always put a nice shirt on, right? But you can always wear the sweatpants and slippers to where people don't see. That's the nice part of working from home. You can't wear sweatpants to the office.
Right, that is true. You don't have to do that.
Yeah, and the commute is really nice, especially on snowy days.
Yeah, you just go to down the stairs or go to your kitchen or your office or dining room. A lot of people I know work.
I do have a dedicated office space, thankfully, but I do know a lot of people just work from their dining room table.
Right, exactly.
So let's go back to the fixed and ARM real quick. Just one other thing. So
go for it.
In the past, the nice thing about the ARM was that the initial interest rate was much lower than what you could get on a 30-year fix, and we're not actually seeing that today. So I haven't recommended an ARM product for quite a while, but I do think they might become a little more popular in a declining interest rate environment.
Okay.
That way you get that lower fixed rate up front, and then you can refinance later and as rates are coming down. But the market, it's been a crazy wild ride here, since the Fed started cutting rates in 2022. So we don't know what's going to happen, but I do really think that by the end of the year we'll see that below 5 number.
Oh, well,
or below 6.
Good.
Excuse me, the 5 number.
Good, and it is good. It is good to help with affordability, as we always say. So that
makes
will
a big
definitely
difference.
help. And we do have people. I do have people who are waiting on the sidelines, even though I am urging to move now and then refinance. But I understand, having gone through it a few times myself personally. I mean, we've bought in a few houses, but then also rentals. So just get information. That's the big deal. Make sure you educate yourself.
Well, and that's what Kim and I are really passionate about. That's why we're doing this podcast. And I think the key is to helping people make an educated decision, no matter what
Right.
that decision is. Here, we're going to lay out the options for you. You know exactly what you're getting into, and you can make a well-informed decision. And a part of that, right, is what we're doing. We're actually going to do a homebuyer education class.
We are.
Yeah, so we're going to hold that on. We figured there's an extra day this month, right? We have the 29th of February.
Right. It's a leap year.
Leap year. And so what better to do with that extra day is something that might help you in the future. And so we're going to hold this homebuyer class on February 29th.
Where we will both be there. And if you have any real estate questions, and it's for anyone thinking about buying a house. So if you've bought in a house in the past, but you are currently renting, if you have never bought in a house, we will be there to kind of educate you on loan programs like we just did right now, and then also answer any real estate and mortgage questions. But that will be February 29th, I believe 6 p.m., and it'll be at our Denver Tech Center office.
Yeah, like Dry Creek and 25.
10111 Inverness Drive.
Wow.
Unit P as in Paul.
Wow,
I
that's
believe.
impressive memory.
I think that's
do you have
right.
the flyer up on
I don't
your?
know. No,
that is
but
impressive.
Is that correct?
You know what? I think I have it here. I can confirm.
Correct? I
Just in
think that's
case.
correct.
Yeah, 1011 Inverness Main
Three
Street.
ones. 10111.
Did I only say two?
Yeah.
Yes. So if you're familiar with that area, there's a Eddie Merlot's is right there. It's just right east of 25 off of
Come
Dry
by
Creek.
and see us. But before we wrap up, let's just touch base.
Yes, so
Realtors
you- yeah.
have to take a continuing education class
I
every
love
year
CE.
we have to take 4 hours of continuing education.
Mm-hmm.
You're 24 hours in a 3-year period, but 12 of those hours, right, in those 3 years are this continuing education class,
Right.
which I just took yesterday. And so they usually give us an update on what's new in the purchase contract, which there's always, every year, there's something new. And so you just want to make sure that if you have a realtor, or if you don't have, you want a realtor, because our contracts are pretty,
How many pages are they now?
I think they're about, actually I don't know because everything's electronic. I don't print them out all that much. But I
Right.
think they're like 13, 14
They're
pages.
getting pretty long.
Yeah, at one point.
Weren't they like
They
7
were like
or 8?
17, 18, 20 pages at one
So-
point, I think. And so they are.
They've brought them back a little bit.
They
then.
have brought
Oh,
them
that's
back
good.
a little bit.
That's good.
But, new things come up. And so one thing that we are seeing here in the Denver metro area are metro districts. And so they are now requiring that if you live in a metro district, that you put the website of that metro district, which is new this year. So a metro district is like, for instance, I live in a metro district.
As do I.
As do you,
Yeah,
right? Most of Highlands Ranch is the metro
Yeah,
district.
and the majority of the newer homes being built
Are metro
are
districts.
metro districts.
Yeah.
And so
So you could have an HOA and a metro district. A metro district being if you are paying extra taxes for, it can be amenities, it can be like you're still paying off the roads and the infrastructure,
Yeah.
which it used to be builders would take care of that, but now they have passed that cost onto the homeowner. And so there are more metro districts now than we have ever seen. So just something to think about as you as a seller. Just make sure that if you live in a metro district, to tell your realtor and then to make sure that they add that in on the contract. So that was a new thing. And of course, there's a lot more, but we wanted to just bring that to the attention as more metro districts are,
Yeah, that's interesting. And so the metro districts cover all kinds of stuff. But it's not paid like an HOA, right? It's wrapped into the taxes.
The taxes.
Right.
Correct.
So it's like in addition to the taxes that you're paying.
There are some neighborhoods that are just a metro district and they don't have an HOA. We are different. Like, for instance, I live in Ken Carroll. We are a metro district and we have an HOA.
Right.
And same with Highlands Ranch, right? They are a metro district and have an HOA. I think there's some, I don't know. I think Sterling Ranch. I don't know about all of Sterling Ranch. Are they just a metro district
and
not
an
HOA? But I don't live there.
I think they have an HOA as well.
Oh, do they?
I do, but I'm not 100% sure. I haven't done a ton of transactions out there.
Yeah.
But
and Sterling Ranch is almost built out.
There,
it's pretty crazy. That's on the south side of Chatfield Reservoir, if you guys aren't familiar. A whole
beautiful
new
community.
Beautiful.
Yeah. A lot of trails they're putting in there, and that's kind of the stuff that you're paying through those metro is those amenities over and above the typical.
Correct.
Yeah.
So that is the one thing I thought I would bring to the attention of viewers if you guys were thinking about, selling anytime soon.
Yeah.
Yeah.
Well, that's great information.
Thanks. And thank you for all the loan information. I know we've talked about loans, but we talked mostly about down payment before. We wanted to make sure that we could educate you guys on what actual loan products there were, or the 4 types of
and this is a very high level overview, right? So if you're really interested in applying or seeing what you can qualify for, I will go much more in depth. We only have about 30 minutes here.
Right. And we would love for you guys to come to the home buyer class if you're thinking about buying. So if so, we will see you in a couple of weeks.
Yeah.
And if not, hopefully you continue to listen to our podcast.
Absolutely. Yeah. And if you find this valuable, please make sure to share it with your friends. Give us a rating. We're also on iTunes and Spotify as well as YouTube. So appreciate you guys.
All right. Bye.